A very good morning to everyone. My deepest apologies for being rather delayed for the webinar. There are some technical glitches that we were trying to solve at our end. Just quickly, so that to make sure that everybody is able to hear me properly, could you please type something on the questions panel on the right side of your screen, whether or not you are being able to hear me properly? Could any of the attendees do that? Great, great. So I've already got the input from a couple of people that they are able to hear me well. Once again, welcome to the webinar, and extremely sorry for the delay of about 10 or 15 minutes because of the technical glitches we were having with the software. Again, very quickly, just to make sure, is everybody able to see the screen also? Are you able to see the presentation of impact of GST? Cool. Again, we have got an affirmative yes from everyone, so we could possibly move forward. We are having about 40 odd people in attendance right now. We have got about more than 100 registrations, so there will be more people who will be joining in a couple of minutes. I'm hoping that nobody already left. Just to give start with a quick introduction. The topic of today's webinar is the impact of GST, which is the Goods and Services Tax, on solar rooftop power plants. I'm your speaker. My name is Puneet Singh Jaggi, and I've got an experience of development of about 2 gigawatts solar power plants as consultants and advisors, and have executed about 20 megawatt of rooftop projects. So have a decent idea from the perspective of an EPC player, have a decent idea from the perspective of the owner as well. Typically, as is the case with the webinars that we have at Ezysolare, we request you to please keep the questions for the end of the webinar, and this will be about a half an hour or so webinar. And if there are any questions, we'll take it at the end. Again, just a minute on Ezysolare. Ezysolare is basically a platform wherein any user, whether that be a solar rooftop owner or whether that be an EPC service provider, can design the entire system online, can purchase all of the equipment that are required for a solar power plant from an online marketplace, like you have an Amazon or a Flipkart. Similarly, you have SolarCart at Ezysolare, where you could buy modules, inverters, structures, cables, junction boxes, earthing equipment, anything and everything that goes into a solar power plant. And lastly, you could also connect with interesting leads looking to get installation, or with roof installers, solar installers whom you would want to connect with to get a plant installed on your rooftop. Now coming to the topic of today, that what is actually GST? It is called Goods and Services Tax, but effectively, the problem that has been there in India for a very, very long time is that we have got a lot many indirect taxes. We have got excise, we have got customs, we have got VAT, CST, service tax, then there are surcharges and cesses on top of that. So we have got many different versions of taxations. These taxations depend upon the kind of goods that you are applying them to, or services for that matter. They are also state specific, right? So VAT in different states on different products will be different. So because of all of this, there's a lot of confusion that is there, and lots of loopholes that people are able to enjoy. Now the idea of GST is that there'll be one market, the entire country, and there'll be one tax for that market, which means that all of these excise, VAT, CST, service tax, surcharges, all of these will go away, and we'll have a single GST instead of all of them, right? The flip side of implementation of GST is that, like they are doing away with all the cesses and surcharges, they are also doing away with any kind of exemptions, or at least that is in the originally proposed structure, right? So that might potentially be a problem for solar power plants. Moving on, then, the other advantage, or one of the features of GST, is that it levelizes the playing field. What I mean to say by that is that currently different states are able to give different advantages to solar procurement For example, if you are to sell equipment from Rajasthan, you get exemptions on CST and VAT from Rajasthan. But with the implementation of GST, in all probability, these exemptions, state-specific exemptions might go away, and whatever rules might apply to the entire market, right? So, in effect, a single structure wherein you don't have to bother about 10 different taxations, you don't have to bother about 25 different compliances or documentations to maintain. You just need to be bothered about one filing and one system. Now, what does this boil down to effectively is that in the current regime, if you are importing different places for solar, there are different things that apply, right? So typically, for example, more for megawatt scale, but sometimes even for rooftop scales, the modules are imported, right? Inverters, in most cases, in rooftop scale power plants are imported. So what this fundamentally means is that for imported equipment, the basic customs duty, special additional duty, additional customs duty, etc., which was being applied on the inverter, taking it to a total of about 29%, or in case you have an exemption certificate, you would be able to bring that down to 5.15%. That would go away, and instead of that, we'll have a basic customs duty plus GST. Now, GST, there are different rates that we are talking about. We'll come to that in a moment. But effectively, that we are talking about that for inverters, instead of 29%, in case you do not have exemptions, you might have to pay a basic customs duty plus a GST. Similarly, for modules, currently, so far, at least it used to be 0%. In the last 10-15 days or last 1 month, this has been questioned. But so far, it used to be 0% on modules. But even on modules now, although the customs duty remains 0%, but 20% GST would apply. Right, so in case there is no module specific exemption that we are able to get, GST is going to apply. For the equipment manufactured in India, the excise duty that we typically pay as of now is about 12.5%. This is also going to be replaced by GST. For any equipment sold within the state, on top of the excise duty, there used to be a separate VAT which used to be applied, 5% to 14% depending on the state. Now, this excise plus VAT is not going to be applied. There's going to be only one GST that is applied. Similarly, for equipment sold outside of state, instead of VAT, we used to have CST. In case of CFON, that used to be 5%. In case without CFON, that used to be 2%. So, in case of sales across state, we used to have a excise duty plus a CST. Now, instead of that, there will be a standard GST that will apply. And lastly, there is a services component as an EPC contractor that you end up charging, or as an installer that you end up charging. Instead of that service tax of 15%, we are also going to have GST there as well. Now, coming to the question of what is the expected rate of GST. In the bill that is being passed, there are different categories of equipment on which different GST might apply. Currently, there are 3 categories. There is an essential category, a merit list, a normal list. There is also a 4th category called demerit list. Now, essential commodities basically include things like wheat, pulses, etc., which there are about 100 such quantities, which will definitely attract 0% GST. So, there is going to be 0% GST on these equipment. If solar is included in the merit list, which seems most likely to be the case, the GST is going to be 12%. If it is included under the normal list, then it is going to be in the range of about 18% to 20%. And though it's never going to happen, but the demerit list, which is applicable to luxury cars and tobacco and other things, that might be about 40%. There are also some discussions that there might be a special category that is carved out for equipments like solar, like pharma, which are more sensitive, which will have a better preferential rate like 5%, right? We do not know whether it's going to be 5, 12 or 18. So what we try to develop is a basic Excel sheet in which we can plug in the 12%, the 18% or the 5% and see what is the impact that it will have on our costs. With respect to the status of implementation of GST, as you might be very well aware that in July, beginning August, both the houses ratified the bill. Both the parliament houses ratified the bill. In Rajya Sabha also it was passed. Now currently individual state legislatures are ratifying the bill. Once half the states at least ratify the bill will be presented to the president for its assent. Effectively, they are saying that if everything goes well, then the bill will be ratified, and according to that, the entire industry will also have to develop these systems which are applicable to GST. So the IT systems will have to be changed, the taxation systems will have to be changed. That might have some rollout time. So it will definitely not be earlier than April of 2017. It might be later by a couple of months. The government's original target, however, was to get it done by April of 2017. Now, before we get into GST, we also need to understand the system of taking credit on any transaction, right? All of you who might be familiar with taking service tax credit, excise credit, or VAT credit will already be aware about GST credit also, right? The system is exactly the same. So what I mean to say by that is, just as an example, assume that one seller is selling to the another seller and the second seller is selling to the buyer, ultimate buyer of the equipment. Assume for a second that the selling price for the first seller is 100 rupees and the tax in that is 10 rupees. And say the second seller is selling to the buyer at 200 rupees and the tax in that is 20 rupees. Then the tax that is to be deposited by the second seller to the authorities is based on credit that he already has, right? So technically speaking, he should have deposited 20 rupees, but because he had already paid 10% tax to seller 1, so he has a credit of that also, based on which he'll now actually have to give 10 rupees, right? So it's a pretty simple concept of credit. So if I am doing a service, say for example, I'm an EPC contractor. I'm only talking about the service part right now, and I charge 1 lakh rupees to the end owner for commissioning of a project, but I've got subcontractors below me, and the subcontractors that are below me, I pay them 80,000 rupees. So on the 80,000 rupees, I'll have to pay 15% service tax, but on the 1 lakh rupees, my client will have to pay me 15% service tax. Ultimately, what I need to put from my own pocket to the service tax authorities is the difference, which is 20,000 multiplied by 15%, right? Yeah. So that's the concept of taking credit, which also applies to GST. So far, what used to happen is that there are these different areas of credit. You know, you have got separate excise credit, a separate VAT credit, a separate service tax credit, and so on. And there are certain things in which you are not properly able to take credit, which is, for example, sales tax, central sales tax. So all of these systems are going to be replaced by a single GST, wherein even though you might be manufacturing equipment, and hence your client will be paying you excise duty, and you might be taking services from somebody else, so you would be able to you would have to pay service tax on that. So excise credit and service credit is not interchangeable with each other, but with the implementation of GST, all kind of credits get into a central domain of GST, and hence any kind of credit will be able to interchangeable amongst each other, right? Possibly I'll be able to explain this better with an example in the coming slides. Now let's look at a typical transaction. A typical transaction, as is done in the case today, say we bought something from a supplier. It could be modules, it could be, let me take an example of structures, because modules have a lot of exemptions associated with it. I'll take a simpler example. Say we had about 100 rupees of structure that we bought from a supplier. I'm an EPC contractor, imagine, and I bought 100 rupees of structure from supplier. He would charge excise duty on that. I'm assuming that we don't have the MNRE exemptions, because on rooftop projects, very frequently we are not able to get MNRE exemptions in time. right? So say we are able to get excise duty of about, we have to pay excise duty of about 12.5%, which is 12.5 rupees. Now on this 100 plus 12.5 rupees, I also need to pay a CST in case I am going to do a C form. It will be, I'm going to be able to give a C form, it will be 2%. So this becomes additionally 2.25 rupees. So the cost of equipment to EPC contractor would become 114.75. Now, but my basic cost of purchase, however, was 100 rupees over there, right? Margin added on the cost of equipment. Now, note this, that when I am going to bill to my end customer, I am not going to be able to take benefit of excise or CST, right? This is not a creditable thing for the end customer. So the margin that I add is on top of the entire equipment cost. So on top of 114, I add my 10 rupees. It becomes 124. And then I again, assuming that it's an interstate transaction, I again have to, there's a CST component that the end customer has to bear. So 2% of 124.75, approximately 2.5 rupees. So the cost of the solar power plant to the owner is 127.25 rupees in this case, right? Now let me take the example of GST. In GST, things are a little different. So basic cost of supplier was again 100 rupees. I'm taking for a second that the rate of GST that we have to assume is 20%. In that case, 100 plus 20, 120 rupees I need to give. Notice that I don't have to give a separate excise and a separate CST over here. There's a single GST that I need to give. The margin that I add, however, on top of equipment now is not on the 120 rupee cost, because out of this 20 rupees I'll be able to take credit off, right? So the margin that I add is on the basic cost, the value that I have added on that cost. So adding 10 rupees to the 100 rupees, my basic cost to the solar plant owner becomes 110. Again, GST is applicable. So I sell that equipment at, 20% of 110, it's 22 rupees. And the final cost to the owner becomes 132, right? In this, the GST that will be deposited by the supplier is 20 rupees in case he was not buying from anybody else, assuming there's no credit over there. The GST that is going to be deposited by the EPC contractor is going to be after credit. So I'll only be depositing my 2 rupees and not 22 rupees, right? But notice over here that the final cost to customer has become 132, whereas earlier it was 127.25. So what is going to be the percentage of GST is significantly going to determine whether the cost of a solar plant to a customer is going to increase or not. Let me again try to explain it with an Excel sheet example. So the example that you just saw on my screen, the same example is there on the Excel sheet right now. I'll try to enlarge that. I'm hoping that this is much clearer now. So the GST rate, as I said, has been assumed to be 20%, and this is all the other calculation, that 100 plus 12.5% and 2% multiplied by the entire amount, 114.75, and so on. So over here, as I was saying, the cost is coming to be about 132. Now, let us take for a second, if we are unable to get into the merit list category, which is most likely the case, then the GST rate is going to be 12%. There is absolutely no difference to the current regime. Obviously, that price still remains 127.25. But under GST, now the cost is 123.20, right? So my cost of putting up that particular equipment actually goes down. If we are able to get a 5%, then my cost is only 115 in comparison to the current cost of 127.25. I'm sorry. So as you see on the screen, the cost of GST or the percentage of GST has a very significant impact on the end cost to the customer. This is going to get further complicated whether or not we are going to be able to get exemptions under GST. whether or not rooftop solar power plants that you have been building so far, whether or not you have been taking exemptions on them or not, right? So, for example, the case that you are seeing on the screen is the plain veranda case, wherein you are paying all the exemptions duty. You're not getting any kind of all the excise duties, and you're not getting any kind of exemptions. And similarly, other duties are also paid. I hope we are able to make this a little clear. Moving on back to the presentation. So there are three stakeholders which are sector per se. There is a manufacturer or distributor of equipment, there is an EPC contractor, and there is a solar plant owner eventually. Each of these would have a different impact. For the manufacturer won't be bearing any extra cost, right? So earlier also he was adding the excise duty and sending it ahead. And now also he'll be adding that extra excise duty and sending it ahead. I mean, he'll be billing to the EPC contractor who buys from the manufacturer, right? However, his cost of the equipment might become higher depending on the GST rate. So currently, as you saw, that he used to charge 12.5% excise plus a 2% CST, or in case you got an excise exemption certificate, then only a 2% CST. But with a 20% GST, that is definitely going to rise. Alternatively, it might go down in case the GST rate is 12% or 5%. For the distributor, however, earlier he was passing on the burden of excise to customers. Now he'll pass on the burden of GST. In case he's importing equipment, earlier he was passing on the burden of customs duty to the customer plus CST. Now he'll be passing on the burden of GST plus basic customs duty. Note that when you're importing equipment, you still have to pay the basic customs duty in addition to the GST. That in the current scheme of implementation of GST, that hasn't gone away, right? But considering that the net cost of customs duty that used to come to about 29%, in all probability, even after the implementation of GST, the cost of equipment should in all probability go down. For an EPC contractor, everything is a pass-through, right? So whatever you'll get, you'll end up passing up ahead. So there's very little impact, except that his cost of increase of cost of products and ultimately cost of sale goes up. For a solar power plant owner, the GST means many things, right? For example, it could be any business, but say for example, if I was running a consultancy business, in that consultancy business, the services that I provide to my end customers is purely professional service, which attracts a 15% service tax. Now, on my building, if I wanted to set up a solar power plant and I engage with an EPC contractor for that, he would give me inclusive of all the taxes, right? So he would end up paying the excise to his manufacturer, the CST to his manufacturer, then on top of his entire equipment, he'll charge a CST to me and he'll charge a component of service tax to me. So far, I used to be able to take the credit only on the service component of the EPC contract. I could not take the credit on the excise and sales tax component that he was charging for all the equipment that were being supplied to me. But now, because of inclusion of GST, what it means to me is that because I've got a very large services outflow that I give to my clients, if I install the solar power plant on top of my roof and I engage an EPC contractor, I'll also be able to take credit on the equipment and services that are being given to me by my EPC contractor. I'm not sure if I'm able to make this clear. I'm hoping that in the question answer round, we can make that also clear. But effectively, what happened, and this is just one example in case of a consultancy. Let me take a case of a manufacturing company also. If you were manufacturing textiles, for example, right? But you were taking the equipment from an EPC contractor. You engage with an EPC contractor to build everything for you. So the EPC contractor has already paid excise and everything when he bought the equipment from the manufacturer, and he billed that equipment to you. As a textile owner, I can take benefit of excise because that's what I charge to my end clients. But because I've engaged with an EPC contractor in middle, and my EPC contractor cannot take the benefit of excise, so he cannot pass that through to me either. But in the case of GST, everything now can get passed upon, right? So to the end owner, for no matter what is the kind of business that he is in, he would definitely be able to take benefit of GST. So what are the advantages and disadvantages of GST in this case? Number one, the unused credit of services, excise, VAT, etc. would now get used, whether that be at the level of EPC contractor, or whether that be level of the end owner, or whether that be at the level of manufacturer, whatever it is. Second is that since there is a single tax, so less confusion, and hence there is an ease of doing business. The third is that there is a lot of documentation currently which is required the moment you need to pass boundaries between one state, right? So in Karnataka, you require an e-Shugam form. In Kerala, you require a different form. In Gujarat, you require a form 403, so on and so forth. With the implementation of GST, all of these forms will go away. The last thing is that levelization of playing field. In the current structure, there is no different tax that has been taken into account for different states. So currently the advantage that has been provided by, say, Rajasthan, Uttar Pradesh, Karnataka, etc. Right? So in Rajasthan and Uttar Pradesh, if you were to buy any kind of a solar equipment, the CST and VAT would be exempted. Right? Similarly, if in Maharashtra you were to buy solar panels, the CST and VAT on that would be exempted. Right? But now with this, wherein they are doing away with any kind of state-specific exemptions to begin with, at least, all these states are at the common playing field. This might be disadvantageous to a couple of manufacturers who had opened warehouses and who had opened factories assuming these tax benefits. What are the disadvantages that are going to be there? The disadvantages that are there are that, number one, in case the GST rate is high, it will lead to a higher cost of equipment. Number two, these state-specific exemptions and excise exemptions and customs exemptions that we used to get in solar power plants might go away. Number three, the C form, which was required, the statutory C form, which was required, on the basis of which we used to be able to get a concessional CST rate, a 2% CST rate instead of 5%. This will go away. So there won't be any requirement of C form. There will be a standard GST that is going to be charged. With or without C form, that is going to be removed anyway. The next part, which is the recommendations that have been typically given by industry bodies as well as by the draft paper that MNRE had taken out, that they had requested that the exemptions should be continued, and the products which were currently not under exemption, the exemption should also be extended to them, considering that we are making single tax structure. So all solar products which are there should come under exemption. So basically what we are trying to say that the GST for all solar products should be zero. If not zero, then solar power should be treated in a preferential tax rate at least. And third thing is that we should have a uniform rate across different states. Now the GST of 20% or 10% or whatever it is, right, that is going to be charged, that is essentially composed of a central GST and a state GST. So if you add these two, say for example, if the GST is 20%, then the central is 10% and state is 10%. The state can probably increase or decrease its GST, but that would take away the uniformity of the GST. So the recommendation that has gone out is that whatever reduction of state GST happens should happen across the board and not specific to one or two individual states. With this, we come to the end of the webinar. I hope that the webinar has been able to get at least some level of clarity to you. You could get in touch with us for any kind of solar requirements, the design requirements, or if you are looking for solar leads, or if you want to get a simple layout designed, or for any kind of equipment that you would want to buy for solar, you could ask us. Now we can also start taking some questions if you have any. There is a clarity that Mr. Ketan Jasani has given. He has said that for any industry, if GST is less than the existing excise duty, it will be advantage on taxation and hence in total cost, otherwise not. So essentially what we are trying to say is that if the rate that is there for GST is lesser than the excise duty, then the cost of the equipment will go down, otherwise the cost of the equipment might go up. Well, I think that it is a little more complicated than that, because we have to take into consideration the cost of excise plus CST both, or cost of excise plus VAT that we pay right now vis-a-vis the new rate tax that we get from GST, right? So one is that, and second is that we need to take care of the exemptions. The another question by Mr. Simon Sekar is that what happens in case of Pondicherry, which is a union territory, any exemptions? To the best of my idea, the taxation is not going to be dependent according to a particular state or union territory anymore. It is going to become uniform across the country. But we'll have to look at the final bill that is passed before we can understand this. Pujan sir asks a question that is the sale of renewable electricity part of a GST? So far, the electricity is covered under Section 53 of this entire Act. Section 53 has been kept outside the purview of GST. So no, sale of electricity is not a part of GST so far, at least. Expecting that GST comes in effect on 1st of April, if the invoice is raised before 31st March and material moves out of suppliers before 31st March and delivery happens after 1st April, will GST apply? It's a very relevant question, but I am afraid I do not know the answer to this. I'm sure there are making systems to reconcile the GST and the existing taxation. So that reconciliation would already take care of this as well. It's also that at what point does a tax get imposed? For example, an excise tax gets imposed at the point the vehicle leaves the factory with the equipment, right? So it is also going. So in case that has happened in April, then that would apply in April, whereas the CST probably is there once you actually that sale is done. So it's a little complicated question. I'm afraid I don't have an answer to this properly, but the reconciliation rules will be able to tell you that. So please could you explain how reselling as a trader and selling as a manufacturer have come on a level playing field? So what is happening is that currently on manufacturer you have an excise duty plus a CST. That so to a seller, if I am a reseller, I would pay an excise duty plus a CST to my manufacturer, and then I would add another CST on top of that and sell it ahead. My end customer would not be able to take advantage of the excise duty or CST that I have paid. The advantage that the GST has is that although the rate might be slightly higher in comparison to the CST that we apply, but the cost of equipment finally might go down for the end buyer in case there is a uniform GST with which you can take credit off. I'm not sure if I'm able to make my point clear or not, but because effectively because a reseller as well as because a manufacturer, both of them end up charging a GST instead of earlier manufacturer charging a separate excise plus CST and you charging only a CST. So you are able to have a clear pass-through of all taxes and a clear credit of all taxes that you can now take, and earlier were not able to do that. Is there any IGST? Because some of the CAs are talking about an IGST, which is interstate GST. Yes, IGST doesn't refer to interstate GST. IGST refers to integrated GST, basically, which is a combination of CGST plus central GST and state GST. But in case there's an inter-sale of equipment between one state and the other, then in addition to the 12% or 20% GST, there'll be a one-time 1% rate which will also be applicable, right? At least in the draft guidelines that is there. So between the states, like you had 2% right now, you'll still have to have 1%, which is non-creditable. There are a couple of more questions. For example, that the VAT and service tax are exempted for new companies until 10 lakhs of revenue. Is there something like this in the GST as well? What is going to happen to all the exemptions is as of now unclear. We'll have to see that. These are policies which are applicable, which will finally be ratified by all states and come out. So this is what I've explained in the presentation is the basics of GST on solar. There are going to be many small things which are impacted or not impacted depending on the product, depending upon the service, depending upon the state of the EPC contractor, depending also on the state of the equipment supplier. So for example, I've been talking about excise for a very long time, but there is a rule which says that if your revenue is lower than a particular amount, then you are exempted from paying excise altogether, right? So there are many such things that you need to take into consideration. If as a new entity we do not have VAT, what would be the process to get new entities registered for GST? I believe there's going to be a single GST registration, after which you do not have to get a separate VAT, a separate excise, a separate service tax registration. There's only the single GST registration that is going to work in all the entities. There are some more questions, but again, they are dealing with mostly nuances. So probably we'll end the webinar now. If there are any specific questions, we encourage you to please write to us and we'll try to reply back. You could also get in touch with Siddharth, whose phone number is given on the screen, for any of your queries with respect to any products, with respect to probably GST also, with respect to policies in general, with respect to design inquiries, anything at all that we could be of help. Thank you so much once again for being a fantastic audience. I hope this has been of some use to you, or at least to some of you. Thank you again.